Hey guys, welcome to today's session, Market Snapshot session. My name is Samson Mzera, and I will be taking you through the banks that we have had speak today and what we expect this week. So we have quite a lot of central bank activity, and I'm sure you've been following with the Monday Market Snapshot and today's Market Snapshot. So let's quickly head into it and start us off with the dollar, and then you're going to have perspective on what the other currencies are doing. So this is where we're going to start things, because we already know that we have what is it called? We have the 4MC on Wednesday and the expectation. So in our previous session, we did a small tutorial or session about how to read expectations and how to know what is important and what isn't important. If you haven't watched that, also you can just go to the Market Snapshot FX Pesa sessions, and then just quickly from there you can see the most recent Market Snapshot that I have done. You can just check, because we went through quite a lot in terms of expectations, and that's the same concepts we're going to use in this session. So we have the federal funds rate being released on Wednesday, that's tomorrow, and then for MC projections, and then the statement. Now, what's important is this statement over here, and I'm quickly going to open an article that covers that quite nicely over here. Yeah. Okay. So again, why are these expectations important? Why do we need to know what the FOMC is doing? It's because we need to know the direction of the dollar. Yeah. So if we need to know the direction of the dollar, first we need to know what the members of the Open Market Committee are thinking, and that's going to provide us some insight into what to do. So yeah, it's saying currently economists overwhelmingly expect the Federal Reserve to leave interest rates unchanged at this. Remember, the current interest rates are, I think, 5.5%. So that one is a given. And if you want to follow interest rate expectations, you can simply do so from which site is it? From this. So from the CME Fed Watch tool, you can always follow interest rate expectations. What are traders expecting? Remember, it's these expectations that eventually drive prices either up or down. So if you're expecting higher interest rates, then it's going to be a strong dollar. And if you're expecting no change, like today, you see here, we have, this is on 20th, which is tomorrow. The expectation for the interest rates to remain the same is 99%. So 99% of analysts and economists are expecting this to remain the same at this range. Yeah, and then there's only 1% that is expecting a cut. So that's a very small percentage compared to, for example, for March, you can see the number of guys expecting for May, the number of guys expecting a cut increases slowly. So going to the year, you can see that number slowly gains and gains. So more people are expecting a cut in July than today. So today, it's largely expected that we will stay the same, yeah, for today's announcement. But we're not interested in today's announcement. We are interested in what they will do next time. Yeah, so heading into the meeting, the key question is not about current interest rates, rather it's about the central bank expectations for future interest rates, i.e. the dot plot of the interest rate forecast. Yeah, as a reminder, the last summary of economic projections in December include the following dot plot. So this is a dot plot. It simply tells us where different members see interest rates going forward. Yeah, so the dot plot for that was done in December was the mean interest rate should be at around 5%. Yeah, so they were expecting only 25 basis points interest rate cuts for 2024. Yeah, for this week, the risks are skewed towards a less dovish outcome, with the potential for a median plot of 4.9% or only 2 rate cuts. So it means less and less people are expecting that aggressiveness in cuts. And that means the dollar might likely stay strong, at least throughout the week. And yeah, so such a change would likely require the FOMC members shifting the expectations toward higher interest rates. Notably, the chairman stated that FOMC wanted to see ongoing low inflation with regards to readings to have confidence to start cutting rates, as is in the last press conference. Okay, so Jerome Powell and company may not need to cut interest rates as aggressively as expected. Now, this is now going into the future. And you can see from that, the DXY has just been going up. So the dollar index has been strengthening over time. And that partly explains what we are seeing on the charts with the dollar strengthening across the board. So if you look at USD JPY, and there's news also on Japanese yen that we'll look at shortly, but on USD JPY, you have the dollar going up for the past 2-3, actually it's 1 week. Yeah, this chunk of here of candles. Yeah, you see, we've just been going up for the past 2-3 weeks, like 1 week, sorry. Same thing with the pound. We've just been trending lower because expectations are we might not really be looking at that aggressive cut that we've been expecting. So the dollar might still hold its ground for the better part of this year. And that also applies for Euro USD. So where is Euro USD? Over here. Just a minute. Euro USD. Same thing. Yeah. Let me just clear this chart. We have that repricing of expectations, and the market is finally agreeing with the Fed that we might not see cuts as aggressively as expected. So that means a continuation of the downtrend. So if I am trading, for example, if I'm trading supply and demand, I'll be very careful trying to buy from here because this is clearly a zone, but I'll be very careful trying to buy from here. Instead, what I will be looking at is, can I see an extension lower and then possibly a reversal at this point over here or at this zone over here, and then that's when I'll be looking to see, can I continue going lower. Edwin Maina, hello. Manti, hello. Brian and everything football. Nice to see you guys. So if you have any questions at the moment, you can just feel free to let me know or just type them on the chat section. But again, we are looking at the expectations for the dollar first. Yeah. Once we have expectations cleared out, and then we can go to other currencies. Remember, when you're looking at fundamentals, you have to consider both economies for you to make a good judgment on what is happening. And the first one is establishing with clarity that the dollar might still have room to strengthen for the week. Yeah, the dollar might have room to strengthen. Now then, after we know that, we can go to other currencies. And the first currency we've had in the morning coming in hot was USD JP, or the Japanese yen. And let's just have a look at what has been happening on that end of things. Yeah, so just come back to this. So today morning coming in hot was this BOJ policy rate hike. So again, expectations. We were expecting, these are wrong expectations. Anyway, we are expecting, let me just use another website. Sometimes you have to be very careful with these websites. Just a minute. Sometimes it's good to cross-check the websites that you're looking at. Yeah. So yeah, okay. Just a minute. Okay. So we were expecting the BOJ to raise the interest rates. Basically, they have been having negative rates for the longest, and now we have this. We're expecting them to put them back up to zero. Yeah, and that's what they did. We're expecting. Just a minute. Yeah. So here, the BOJ interest rate decision. The previous was negative 0.1. The consensus or the expectation was 0%, and the actual came in at 0%. So it came in exactly as we expected. Let's see what the question is. Okay, so we'll talk about what we mean by the dollar being strong in a minute, but we were expecting interest rates, the Japanese yen, of course, to raise interest rates and to end that yield curve control policy. Remember, yield curve control means they are releasing a lot of Japanese yen into the economy, and that is weakening the Japanese yen, which explains what has been happening to the Japanese yen, and this is something we've covered multiple times. This entire uptrend over here is because of yield curve control in a market where other central banks are tightening. So if you're buying bonds, you're using cash to buy those bonds. And because you're using cash, then you're giving it to investors. Basically, you're releasing that cash to the economy, and it becomes plentiful in supply. And that means now the cash loses value. And that's why you've seen this. Now, the expectation today morning was they're going to stop. They're going to have positive rates for once in 17 years, and things are going to look different. Yeah, but they did that, which is here. BOJ ends negative rates shift from unprecedented monetary easing. That's what they've been doing for the past 2-3 years. But then they have done that, but at the same time, here, remember, this is the problem. Just a minute. Okay. Yeah. So despite removal of the yield cap, the central bank will continue to buy long-term Japanese government bonds. Yeah. So we thought it's coming to an end, but this happens. They say you're still going to buy bonds. And remember, that was the entire problem with the Bank of Japan. When you buy bonds, you're releasing yen into the economy, and when you release yen into the economy, it loses value because you keep on, buying more and more and giving it to investors. So yes, they've raised interest rates. Yes, they're going to end the yield curve control policy, but they are still doing this. Yeah. And because of that, then we had this reaction in the morning. Yeah. We raised interest rates. It spiked a little bit. And then after that conference, after those statements came in and investors interpreted it, we went back up. Yeah. So the problem is still there. In as much as they've said we are raising interest rates, again, you're raising interest rates and at the same time you're still buying bonds. So the Japanese yen is going to continue being weaker. So it's not as straightforward trade as it appeared to be. So just because you've seen a raise in interest rates doesn't mean sell USD JPY immediately. You need to read between the fine lines just to know what exactly the monetary policy committee is up to. Yeah, and in this case, assuming we have room to go higher, what targets can we look into, or what targets can we watch out for? So first off, we'll mark the most recent high, which was 151. This is USD JPY, and this applies for guys also doing GBP JPY. It's the same thing. Yeah, I know there are a lot of guys who are trying to sell GBP JPY, which is why, especially when it comes to interest rates decisions, you don't trade them like CPI or NFP. These ones you have to go through the statements, because they can be something that you have missed from just a basic green buy, red sell. Yeah, because there's that statement that you have to go through. Yeah, so I know even guys were trying to sell GBP JPY and it didn't work out. Now you have to be careful. If you're looking for sales on this one, you have to be very careful, because again, it's clear that they're going to be buying bonds if the yields don't improve. Yeah, so sellers have to be very careful in this market. Buyers at the same time, you are looking for trend continuations. Yeah, what opportunities can I see, for example, in GJ or in USD JPY? What opportunities are there for you to continue buying? So yep, Great Britain pound, again, we have news for tomorrow. So again, you have to balance it. It's not going to look very obvious at the moment, especially because you have CPI for pound tomorrow. So this one might give you some room for sellers considering the expectation. But then again, this is the most straightforward one. Why? It's clear where the dollar is going. It's clear where the yen is going. Yeah, so it's a very clear trend for you to trade, especially guys who like trading trends. This is, again, fundamentals are backing the trend. So just use your technicals on USD JPY. Next, before we go to GBP USD, you can see it's weakening because of tomorrow's expectation. Yeah, tomorrow's expectation for CPI, but we will talk about that again. We did a whole session on how to use expectations to interpret the charts on my previous market snapshot. So you can just refer to that market snapshot like 10 days ago. Yeah, so just go to that. We did a whole session for interpreting fundamentals on your chart. And the main point is on expectations. Now, before we go to GBP USD, let's look at the other central bank that had something to say today. So that was the Reserve Bank of Australia. So this one was more or less the same thing. I have an article for this over here. Okay, so the RBA met today to discuss policy. Okay, is it highlighting? Yeah, to discuss policy, but there was an expectation. There was no expectation for any rate change. Again, expectations, and the entire focus was on the statement. Now, going into these statements, these are statements for central banks or these interest rate decisions. Remember, they come with statements. The statements are more important than the interest rate, unless it's a surprise hike or something the market wasn't expecting. And then number two, we've said you need to cross-check these expectations. You can see here Forex Factory, you're saying the expectation is negative 0.1. But the expectation, if you cross-check from other news outlets, you will find that it clearly was zero. Actually, let me just policy rate, just a minute. Yeah, actually, this one, this is a bit confusing. This is more in line with what you're talking about. Yeah, so sometimes you have to be very careful, especially at fundamentals. The previous was negative 0.1, the consensus was 0, and that. So it seems here there is a bit of a misunderstanding with how they've plotted this data. Anyway, okay, so back to what we are talking about, the RBA. The sum total of what markets are reacting today amounts to 11 words. Yeah, so usually you go through that statement, and if you can't understand it, just wait for a few minutes and then see what articles are saying about it and then try to interpret it, because this one sets for you the long-term trend in the markets, and that's what you need. These are the so these are, and a further increase in interest rates cannot be ruled out. Yeah, again, you're looking at what are they going to do next. These 11 words were in the February RBA statement, but were replaced with the March statement by, and the board is not ruling out anything out. So remember, in the previous statement, they said we might raise interest rates, or interest rates cannot be ruled out. Yeah. Now here they've changed their tone and they're saying anything cannot be ruled out. So now it's like they're coming back on that expectation of, are you going to raise interest rate? Obviously, but now it's like we might do it, we might not do it. Yeah. In central bank speak, now this is them interpreting what that means. This means that the RBA is signaling that it has a neutral outlook on rates, whereas before it had a tightening bias. Tightening meaning it was increasing rates. So you can see there is that shift from them expecting to raise to them being neutral, and then sometimes they can be them expecting to cut. So this neutrality is what you can read on the markets with AUD USD. So sometimes you can just read at fundamentals and you already know the direction of that chart. So AUD USD is over here, and you can already see, because we don't expect any cuts. Sorry, we don't expect any cuts. Number one, no hikes. Yeah, remember the statement is saying hikes. We might, yeah. So initially they wanted to hike, increase rates. That's a strong Australian dollar, but now they are neutral. Yeah, they're not really looking to anything might happen. So that's why the Australian dollar is weakening. Again, we know why the dollar is strong, and hence we know how this trend is going to pan out. So obviously this is going to continue being a downtrend. How you play out the downtrend, now you have to rely on your technicals. Yeah, technical analysis. That's where it comes in, for you to have perfect timing for these sessions, for these charts. In this case, we know why we are moving lower on Australian dollar, why that trend is in that direction. So if I can just mark a few key levels over here, obviously we have a low, and I know the people who are trading supply demand or order blocks, you're already looking at this level over here and looking to buy, which is, again, you need to be very careful, which is why you need to know what your fundamentals or where the fundamentals lie at. So in this case, can I see how steep this trend is? Yeah. So in this case, we just look for a continuation of this trend. Yeah. And probably one of the optimal entries will be if you, for example, consider a retracement of some sort that can give you an opportunity to continue going lower. Sometimes the retracement might not come. Sometimes you might need to wait for it to come at a clearer level. So in this case, if it doesn't do this above that move for a continuation, then I will be waiting for it down here to consolidate a bit, and then we continue going lower. So that's clear. Again, things might change because tomorrow we still have FOMC. What you're expecting on the Fed depends on tomorrow. Yeah, tomorrow you've said you're expecting there is a meeting and they're going to still keep on saying we are not going to cut rates. That means it's a strong dollar. Yeah, if they say anything tomorrow that changes that outlook, then now what we've said today is completely thrown out of the water. But as long as what you're expecting tomorrow happens as is, that is, the Fed continues talking the way they've been talking. We're not going to cut rates. They're going to stay high. That means the dollar is going to continue being strong. Yeah, then everything here is going to play out the way we just discussed. Yeah, so that's AUD, USD. So we've done two currencies. You've done USD JPY, and then you've done AUD, USD. Now, back to these fundamentals and expectations. Strengthened ever since. So it seems some people are already in on these threads. Anyway, thanks, Ian. Let's go back to this calendar. Let's see. Yeah. So again, expectations. Now we've discussed the central banks. Yeah, but we have CPI readings also to look at. We have the Canadian CPI, and we have Great Britain pound, UK CPI, and then finally we have that meeting over here. Now, what are the expectations for CPI? Again, there's a session for expectations that you can go look at. 10 days ago, market snapshot that I did 10 days ago. Yeah, here it says the forecast is we are expecting month in month, we're expecting it to grow. Median CPI for the year to stay the same. Trimmed CPI to stay the same. So basically, someone who is looking at this might say Canadian dollar or the Canada has sticky inflation. That means looks like the inflation is getting a bit persistent. Yeah, so that's not very good news for someone who is selling USD CAD. Yeah, you need to be very careful. Yes, it's going to strengthen, but to strengthen. But let me just put the charts. Let me just open USD CAD. Okay. Okay. So we know the dollar is strengthening, yeah, but we're expecting sticky inflation from Canada. What does that mean? It means the central bank might also think about hiking rates or making the Canadian dollar stronger. So it's not a very good idea to continue buying on this chart, considering now anything can happen. Yes, we might continue going up, but because you're expecting high or sticky inflation for Canada, then it might give it some strength. It might give the Canadian dollar some strength. So if you're looking to pair currencies, then this might not be a good candidate to trade a strong dollar with at the moment. Yeah, because it's looking a bit tricky. Yeah, so that's one thing you need to know with the expectations. Based on those expectations, we don't need to know the actual announcement. We just need the expectations to guide us on what to do. So we might see some strength on this until the news comes out. It's not a very good idea to continue on this uptrend. I hope that's very clear, and the reasons I've explained. Yeah. Okay. Moving on to the next one, which is tomorrow, pound. What are we expecting for pound year-on-year inflation? We're expecting it to go down. Yeah. Now that's 3.5%. That means we're expecting a weaker Great Britain pound. Yeah. And that explains why, yes, we have had weakness in Japanese yen, but this thing is also having a hard time. You know, USD JPY is easily going up, but GBP JPY is not having it that way because you're also expecting somewhat of weakness from the pound. Why? Because you're expecting a low inflation reading. So you see now, when both of them are weak, it can be very tricky to know which one to start trading and which direction to go. Yeah. But having said that, that makes GBP USD a very obvious downtrend, because number one, strong dollar, number two, weak pound for the meantime. So in this case, you can just be looking for retracements and continuations on this chart. So I can just wait for retracements and then continue going lower, or I can wait for it to reach at key levels in the market. Maybe that's a better idea. And then we just see how it goes going lower. I'll explain why the dollar is gaining against the yen, yet the BOJ raised interest rates. You can just rewind, Brian, you can just rewind the chart, sorry, the video. We've had a session for Japanese yen. We started with the dollar, went to the Japanese yen, and then the Australian dollar. So just spend some time on the video, rewind it kidogo, and you will see it over there. We've explained it extensively. Same thing with AUD, USD, yeah, the RBA. Okay, now we have had our analysis. So if something is weak, if your two currencies are weak, it's probably not a good idea to pair them and trade them together. You need a very strong currency fundamentally and a very weak currency fundamentally. And then for trend traders, you can trade that trend. Yeah, but if both of them are weak fundamentally, like in the case of a pound and Japanese yen, then it's probably not a good idea to touch those in terms of continuations. But if you're looking for reversals, who knows, you might find opportunities for those two. Yeah, and then finally tomorrow in the evening, that's when we have our OMC coming out, and this one is also very important because now it's going to guide us on where we go for the rest of the month. That's next month, actually this month and next month, until we start seeing our CPI reading again and our NFP reading again. So this is pivotal. And tomorrow's market snapshot session, just make sure you ask enough questions on this. Yeah. Things like GDP, not really important. Employment change for Australia, a bit important. We have monetary policy statement. Again, the important thing is not the interest rate itself, it is this statement, yeah, which also answers why the BOJ raised interest rates, but the Japanese yen is weakening. Why? It's because of what they've said on that statement. Yeah, that's what you're looking at, and we've covered that. So you can just rewind and then get back to that. And then this might also have an impact on the Great Britain pound. So in this case, especially this voting that is done over here. So the vote format is reported. So this is the members voting. Who wants to raise interest rates? Who wants to keep them the same? And who wants to raise them? So remember, if you're watching that also, this might come in handy. Again, if you're trading pound or GJ, if we find it's more bullish, okay, let's just go through this. What is repeated first is the number of how many members voted to increase rates, this one, and then the second is the number of how many voted to decrease rates, and then the third is to hold rates. Yeah, so the first number, so there is it 9 members for the monetary policy committee. Yeah, in this case they usually vote. They vote whether to hike rates, maintain the interest rates, or cut them. Yeah, so this is the first is the number of how many members voted to increase in that format. Yeah, so in this case, you can see the market is expecting that 8 members will vote to hold interest rates. 8 members, and then just 1 member is voting to decrease. Yeah, just 1 member is voting to decrease. So that's the format there. Again, if there are more members voting to hold interest rates, stronger pound. Yeah, so we might see pound weakening, and then because more members are expected to hold, it might have a bit of a strength, some strength. Yeah, but the expectations that are most immediate are for tomorrow's inflation. So we look at those first before we adjust, and then that's it for the week. Yeah, okay. If you've missed any part of this video, you can always just rewind. We've covered AUD JPY. We've covered Australian dollar, Japanese yen. Let's look at the others that we've covered. The euro now, and GBP JPY. Yeah, there is also gold. There is gold. Yeah, remember the sentiment thingy we discussed in the previous video. Yeah, this entire push upwards. Now, if you look at gold, if you look at UT100, they are sort of reacting in the same way, and that is they're starting to price in that stronger dollar narrative. Why? Because you have FOMC coming up. We've said here clearly we have FOMC coming up, and that might be holding on to those dollar gains. So investors might be holding on to those dollar gains because we're expecting a strong dollar. So gold might not have any excitement to go really high. Even if it goes high today, you need to be very skeptical with how high it goes, because it might fake out and then continue going lower. So we are seeing this pattern, and it's possibly due to the fact that we expect for MC to have less dovish sentiments, and that is a stronger dollar. Yeah, that is, we expect them to say they're going to hold rates higher for longer, and that's why we have a bit of strength on gold. Yeah, in the event they say something that's not it or what you're expecting, then we can now be sure of a continuation higher. In the meantime, let's see how low this one can get. It's chugging along slowly, and if I see any spike in that direction and the meeting has not occurred, then that's a good opportunity to see where it's going to stop and come back down. If I see any spike going up, then it's a good, because for MCs tomorrow, and if there's a spike before then it's not a fundamentally backed move. Nobody wants to get on the wrong side of the market when the Fed is speaking. So everybody is going to be waiting and seeing. So it's either going to be sideways or it chugs along lower slowly. Yeah, nobody wants to buy when the Fed is about to speak, even institutions. Yeah, so that gives you a good idea of if there's any abnormal move before the meeting, then it's not a sustainable move and it might be corrected in that direction. If it's going lower, then probably explains it because we're expecting a strong dollar till tomorrow. So that covers you on gold, Michael. And having said that, thank you for attending today's session. It's a very packed week, and it usually defines the trend. So if you understand this week properly and you cover the fundamentals properly, then you're good to go until the next major event, which is NFP at the start of the month. So we have 2 good weeks to trade if you have unpacked all the fundamentals for this, because fundamentals usually set the trend for the markets. So once you have had those trends, then you just use your technicals and flow along until the next big fundamental event occurs, which is again interest rates, CPI, or NFP. Having said that, again, thank you for attending the session. See you in the next session, on the Friday session, that is.